Welcome to Trading Nation. I'm Seema Modi. Stocks in the red Monday, the S&P 500 dropping to its lowest level since mid-July. Let's break it all down and what this sell-off means for your portfolio with Jim Bianco, president of Bianco Research, and of course, a lot of questions around Evergrande, the implications this could have on not just Chinese investors, but those who live here in the U.S. So what is your response to clients today, Jim?
Yeah, I think this is much more than just Evergrande. Evergrande was a known quantity even last week. The bonds were already in the 20s. The stock was down about 90% or so. But I think some new information has come in the last few days. First, the issue no one wants to talk about. President Biden's approval rating has taken a big hit in the last few weeks, and that has resulted in his agenda getting a lot more difficult. Look no further than his inability to form a majority around his spending bill right now. And the debt ceiling is coming up. Treasury Secretary Yellen put out an op-ed in the Wall Street Journal today imploring Congress to raise the debt ceiling. I think by Friday, most Wall Street was, this is a done deal. This is not an issue. Why is she begging everybody to raise the debt ceiling? Maybe there's a lot more to it. And given his weakened approval rating, that this might be a little bit more contentious. I think that there is definitely a worry there. And I think the bigger issue is interest rates as well, too. It looks like they've bottomed back in July at 1.12% on the 10-year and are creeping higher. And even with today's sell-off, they're down, yes, but not a whole lot. They're still above 130 as we record. And that suggests that maybe the inflation story is creeping back, something we haven't talked about since the spring.
Right.
And that persistent inflation might be still lingering out there as opposed to transitory inflation. The problem with persistent inflation is then you ask the Fed to do something about it, and that's the Fed has to pull back harder, and that's exactly what the stock market doesn't want to hear.
So let's pick up right there. What exactly are you looking at when it comes to persistent inflation, food, gas, oil prices, and the impact it could have on this week's Fed meeting?
Yeah, what you're seeing in terms of if you were to look at what is the reopening components of CPI, say restaurants, rental cars, airline tickets, and the like, they're coming down, but the rest of the CPI, including energy, is moving higher and is making multi-year highs as a group for the rest of it. That is the persistent part of inflation. Take out all that reopening stuff, and you still have about a 3.5% inflation rate, which is too high for the Federal Reserve as well. And if the market starts believing that the inflation rate is going to stick at around 3%, maybe a little higher, maybe slightly lower, that's unacceptable for a 1.3% 10-year note, and that could cause real problems for the bond market.
So as you stack up all these risks, whether it's Biden's approval rating, the Fed meeting, the persistent inflation, where should stocks be trading at right now? The Dow is currently down about 800 points.
Yeah, the market will have 2 or 3, 5% corrections throughout the year, and I think this is another one. Interestingly, the last one was in May when we were talking about Archegos being whether or not that was going to be a contagion effect, and that disappeared after a few weeks, and I suspect Evergrande might wind up doing the same thing as well, too. But we're having one of these 5% corrections. If you have this correction with interest rates staying sticky or maybe even trending higher, I think that would be the red flag for investors. If the bond market behaves like you should expect it to in the coming few days, where interest rates fall with falling stock prices, then I think you would probably breathe a little sigh of relief that we're probably walking into a capitulation low.
S&P 500 lower by 2% as a 10-year treads right around 1.3%. So it's an important correlation in general. Jim, always great to get your perspective. Thank you for joining us today, Jim Bianco.